Hi everyone, it's Jason Biarco of Wall Street for Main Street. I'm just going to do a short video today recapping some of the highlights I see in the news and also talk about the gold and silver market. First of all, I want to wish everyone a happy Thanksgiving yesterday. Hopefully you got to celebrate it with family and friends and loved ones, and hopefully you have a number of things to be thankful for. And even though we're in challenging world and economic times with lots of bullshit going on right now, unfortunately, with the mainstream media, which I will cover in this video, hopefully you can still have some type of positive, optimistic outlook on how you can improve the situation for yourself, your family, your loved ones, because the real solutions are going to come at that level. They're not really going to come from the top down. I don't think Trump's really going to be able to drain the swamp nearly that much. Okay, so let's dive into things. The gold and silver market, we've been in a very large correction now for a couple months, really since October. The gold price was down to almost $11.50 at one point. We've had a rally today, surprisingly, short covering rally. I'm not sure how long it'll live for, but around $11.50, there's still pretty strong support for gold. Pull up the Kitco chart here. The gold price was hammered down on, this is typical cartel action. The gold price on November 23rd was hammered down a lot, from 12.10 down to like almost 11.80. Just look at that blue chart right there, just a huge hammer. And then, it was hammered down again yesterday when the markets were closed and Globex markets were open. So this is normal cartel behavior. It's been going on this way for really since I started watching the gold market in 2007, 2008. Although things have increased now that high-frequency trading algorithms have improved, and I'll use improved loosely. They've improved for, the rich elites and hedge funds and investment banks and governments that can afford to buy these programs. The little guy on Main Street does not benefit from these programs, really, for the most part. Unless you're a long-term investor and you're looking to accumulate some physical precious metals. This is why you do not, and I repeat, do not, I say this all the time, do not buy all of your gold and silver position at once. Do not buy all of your mining stocks at once. You have to take a long-term view on these things. And you got to be careful making sure if you do buy mining stocks that you don't buy ones with high costs or dangerously bad balance sheets with too much debt, high costs, etc. The silver market, it didn't get down to 16, thank God. If it does get down to 16, that's going to be a danger zone. The miners have cut some costs over the last couple of years to improve things, but there's going to be a lot of physical demand. We are seeing that in the market. The Russians have been buying record amounts of physical gold. Unfortunately, that does not affect the paper price in the short term. In the long term, it puts a floor into the market. It helps put a floor into the market when the Chinese, the Russians, the Indians, either their central banks, their governments, their treasury departments, or individual citizens in those countries, especially China and India, start to buy mass amounts of physical. But the Russian central bank did add a record 44 tons of physical gold in October, according to their website. And they have added, according to Lewis of Small Gold, his research, that he said they've bought over 500 tons of physical gold in the last 3 years or so, since 2014, which would put Russia in the top 6 countries for gold holdings. Although, those gold holdings are not accurate or honest because there's no independent audits and they're intentionally opaque. Okay, so the gold market, in the short term, who knows what could exactly happen for it to go a little bit lower. But in the long term, this is going to prevent a lot of new primary gold and silver mines from coming online. Talk to the royalty and streaming companies. Go and listen to their conference calls in the comments. They're saying about new mine development. There's just not going to be that many new gold and silver mines coming online the next 2 or 3 years because there's not ones that have low capex, good grades, excellent project economics at lower and lower metals prices. Those projects are few and far between now. There's maybe going to be a handful of those types of mines. However, in the long term, this is not going to offset depletion. This is something most people who invest in resource stocks do not understand. If you're a regular value investor and you look at cash flows and things like that, first of all, the cash flows from most mining companies are very unstable because the commodity price fluctuates so much, and most commodity companies don't hedge. Normally, if they do hedge, like a copper miner or an oil producer, they'll hedge for 2 or 3 years forward at most. And then, if the commodity price drops, the hedges come off, and the mining company could be in trouble if their balance sheet's too over leveraged and their costs are too high. They're not what was projected. So these are going to be long-term problems for the gold and silver market. Eventually, in less than 10 years, the new floor in silver price is going to have to be $25 to $30 an ounce. A lot of capital was raised to build new silver mines from 2009 to 2011, maybe a little bit in 2012, and that money is invested. Those mines have come online, costs have been cut to the bone, and those mines have been producing. If they came online in 2009, they've been producing for many years now. So normally a lot of mines only have about 10 years of pretty good reserves, and then normally they can add some reserves to the mine, but normally with mines, the reserves come in at higher and higher costs. So if a mine is running, its original mine plan was only 10 years, but then the mine is running 15, 20, 30 years, normally the grades are going to fall a lot. If you compare the original grades of the mine when it came online to 20, 30 years later, the grades have fallen a lot and the costs have risen. There's very, very few mines where the costs stay around the same or the margins improve. It almost just doesn't really happen. And this is just natural geology. So we're not going to run out of gold or silver. We're not going to run out of oil, but we're going to run out of the cheap and easy stuff where the grades are robust. The project economics are always good in almost any metals or commodity environment. Those projects are few and far between. Once in a while, you can find one in a very, very dangerous or geopolitically unstable country, or the country doesn't have any infrastructure. So then there's additional risk there as well. Rick Rule has made a lot of money investing in those types of companies. The retail investor, though, tends to gamble on those and put way too much of their capital in. This is why you need a diversified portfolio. If you don't have the money to buy a lot of individual mining stocks, you should buy exchange traded fund mining stocks. There's a couple Sprott ones, SGDM, and I forgot the Junior Sprott Gold Miners ETF symbol. There's also GDX and GDXJ, but those ones are having rebalancing problems. Okay, now on to the rest of the news. So I think, long term, this drop in the paper gold and silver's price, it's going to delay any new large amounts of gold and silver mines come online. So this will help put a long-term floor in the price. So, silver, there's going to be a new floor in the future, and it's just going to be because of depletion and replacing reserves. We're pulling so much physical gold and silver out of the ground right now, even at reduced paper prices, that replacing those reserves is not going to be cheap. If you don't believe me on that, speak to the mining companies, check their reserves, ask them how easily it is for them to replace reserves. They're going to have to do acquisitions probably at some point if they haven't already done so. And normally when they do an acquisition to either find a new mine or buy one up, the cost of that mine is going to be quite a bit higher than any of the other mines they have. And this is the problem why regular mining companies are not long-term buy and holds. You can hold them for a couple years through part of a cycle. If you buy when there's blood on the streets, and you can sell into strength when they're going up a lot, you can get hundreds of % returns. If you're lucky with some juniors on timing these things, you can maybe get 1,000% or more. But these things are not long-term buy and holds. The royalty and streaming companies can generate far more consistent free cash flow, even at low metals prices, because their costs are fixed, and they have better normally counterparty diversification. Email us, wallstreetformainstreet@gmail.com, if you want to do a consulting session about this. On to the rest of the news. Okay, so we have the Black Friday, which is today. We already have the reports coming in that it's nowhere near as good. I don't think it's all just because the economy is doing bad and the U.S. consumer doesn't have nearly as much discretionary capital. There's just enormous, even the government's fake job numbers, which say, they're counting part-time jobs as full-time jobs. The economy is still adding some part-time jobs, but people in my age demographic, Generation Xers and millennials, are trying to put a life together with, 2 or 3 part-time jobs. Oh, I see all these. One of the ways to gather data is with Facebook for my generation, also Twitter, social media, and also on dating apps. Because I see, just a lot of people, especially women around here in the DC metro area, they say they have 2 or 3 jobs. They're going to school. I don't know how they sleep. They still say they still have a social life. I don't know how. If you have 2 or 3 jobs and you're going to school for an extra degree, a master's or something like that, you're going to get sick eventually at some point. Maybe people don't think about the future that much. But, this is the new normal. It sucks, but, the economy is just not creating any full-time jobs. Hopefully, Donald Trump will be able to reduce the red tape, rules, regulations, taxes, etc. on small business and entrepreneurs and allow investment to be made in the country. I'm cautiously optimistic he will be able to improve things somewhat. I do not think that like 6 in 10 Americans do who voted for Donald Trump, that he'll be able to totally fix the economy. I think the economy is far too indebted, and I think there's a lot of problems from his supply side economics. If things don't work as well as he thinks they could, the debt could just explode much, much faster. So yeah, I think online shopping with Amazon.com, and there's a lot of other companies that are offering discounts on online shopping. People just aren't going to bricks and mortar stores nearly as much anymore. There's a lot of stories on this in the mainstream media and Zero Hedge. Occasionally, they'll report a Michigan consumer confidence survey saying consumers are confident. Well, consumers are always overconfident, and the problem with Keynesian economics and overconsumption, which is what Keynesian economics created in this country, stop savings and investment for the most part in the private sector, is that it's not part of real capitalism. So you can't continually go into debt and spend and spend and spend money you don't have. That's not real capitalism. There's not savings and investments and prudence there. So I think the real economy, we are seeing with the retail numbers, the Michigan consumer. Oh, the other thing about consumer confidence I wanted to add is that if you read Austrian School of Economics, they say demand is always infinite. So people always want more than they have or can afford. They always want to spend more money than they have. A lot of people always want to spend more money than they have. Not everyone, but a lot, especially Americans, unfortunately, want to spend more money than they have. And this is just the culture and society we have. This is thanks to cultural Marxism and Keynesian economics. The last thing I wanted to talk about, we'll find out the full numbers, though, from Black Friday probably in a couple days, but I don't think they're going to be that good. I think we will see double-digit online sales growth for online retailers. So if you can buy an online retailer or a business that's transitioning to more online retail to cut costs, maybe there's robotics warehouse companies. Those would be interesting investments. The thing is, a lot of companies like Amazon and others are buying up a lot of the companies that make robots for warehouses to stock that instead of retail employees and having as much physical bricks and mortar stores. I think the bricks and mortar stores is just declining so much the last 5-10 years. It's a combination of factors. Okay, the last thing I wanted to talk about, unfortunately, and this is really messed up, the mainstream media is going full retard. Okay, they keep doubling down. They're desperate to maintain the money and power and market share that they have. It's really just unbelievable. This is turning into the modern day McCarthyism now. This is a witch hunt. This is a witch hunt, guys. The mainstream media, what they should be, if they were doing objective investigative journalism, they should be reporting more accurate and balanced news from both sides, interviewing people with differing opinions, showing how people disagree. Instead of what they do right now is they report basically op-eds as facts. So anything from the government is automatically fact. It's really just unbelievable. I was actually at a Ron Paul Institute conference in Northern Virginia in September, and there was a former CIA agent there, and he said that the CIA writes full stories on foreign policy and hands them to journalists at the Washington Post and the New York Times. Okay, this guy was retired. He worked there a lot in the CIA as an analyst. And he said this is routine. So he said the journalists are corrupt. I guess they get paid off on the take. Maybe they change a little bit of grammar here or there. They put their name on these articles, basically, and boom, they make extra money, I guess, doing this. But, basically a lot of these mainstream news, especially like the CNN, look how Donald Trump chewed out CNN first. He called them all a bunch of liars, says he hates their network. I agree. The CNN's just become basically a puppet, a tool for the State Department and the CIA. It's really just unbelievable. Anyways, though, this news story just came out today. Washington Post names Drudge Report, Zero Hedge, and Ron Paul's anti-Clinton sophisticated Russian propaganda tools. Well, guess who's on this list, guys? Paul Craig Roberts is on this list. Luke Rudkowski from We Are Change, who does excellent boots on the ground reporting. He was there in India talking about the cashless society just last week. David Stockman's website is on there. Eric Dubin's website is on here. TheNewsDoctors.com. Here we go. TheNewsDoctors.com. The Economic Collapse blog. This list is unbelievable. Wall Street for Main Street didn't make this list, but it's really Lou Rockwell's on here. Liberty Blitzkrieg, King World News, InfoWars, obviously. Zero Hedge is on here too. WikiLeaks is on there. I will attach a link to this article for you guys to look at it. But it is really just unbelievable, the witch hunt. They're doubling down. It is very scary times we live in now, guys, where anyone who has a disagreeing opinion, you're evil, you're wrong, you're insane. I've heard in the past when I was waking up and becoming a libertarian in 2008 after the 2008 financial crisis and trying to figure out why it happened, as I was waking up and learning about Austrian school economics and libertarian stuff, my progressives friends, some of them were saying I belong in a mental institution because I disagreed with them. These people are committing slander. I have friends online who are looking into Pizzagate, and, they're doing hard investigative journalism that the mainstream media should be doing. They're good citizen investigators like David Seaman and the Pettibone sisters. And, they're being slandered. So, and I think that unfortunately they're going to have hire a lawyer because they're going to have slander and libel. And, these websites like the New York Times are just posting stories that don't disprove the stories that about Pizzagate or any of the other, satanic devil worship cult pedophile ring. They don't disprove any of these things. They just attack the character assassination of the messenger that's saying the opposite. So to call Ron Paul, Russian propaganda tool is unbelievable. I think no one has more integrity than Ron Paul in terms of politicians. Almost all politicians are total scumbags and liars. Most of them are con men. I saw a funny Washington Post story a couple days ago. It was an op-ed, and it said that no one can trust Donald Trump. He conned voters. And I was thinking when I was skimming through the story that almost all politicians are con men. So the word con is in Congress, okay? So to actually say that, one politician is a con man when the rest of them aren't is just, you don't really understand how things work. Or, you're trying to protect the status quo, how things work and you don't care because you already are making a big salary. Things are just so screwed up now, though, guys. It's really a witch hunt now. This is McCarthyism being done. This is hardcore fascism. This is Orwellian. One of the people on Twitter was telling me this is more about Brave New World and Huxleyan. Well, you can pick your dystopian novel, but there's bits and pieces of all this stuff in there. I actually read Brave New World over the summer for the first time. I never read that before. I read 1984 in high school, so maybe I should reread that. But I read Animal Farm by George Orwell for the first time over the summer, too. I wanted to get a grips of things. But yeah, any differing opinion from the, the official state narrative in Brave New World, that was banned. They had people on prescription drugs on the Soma. So, this world we live in now, there's zombies. Zero Hedge talked about zombies for Black Friday. That most of the shoppers now caught on tape, multiple fights break out among Black Friday zombies. We have people now fighting, willing to hurt each other to save, $10 to get a free gift at Victoria's Secret, a free pair of panties or perfume, or save like an extra $20 or $30 on a TV. They're willing to trample one another or kick each other. It's unbelievable. The society we live in, it's totally morally decayed. Not everyone is like this. Obviously, a lot of my listeners here are good, honest people, and they're disturbed by what's happening around them. But, a lot of the society, we've just degraded to Rome. And, this is an interesting last story here by Zero Hedge. I didn't read it yet, but here's what happened when ancient Romans tried to drain the swamp. So, this is what happens at the end of empire, just the moral decay. The money is corrupt. You have an enormous welfare and warfare state. You have a very large military. You have the government willing to do or say anything to maintain power. And this is a dystopian reality we live in. So, they're not going to let gold and silver rise too quickly. The people are saying, oh, gold's going to $5,000 an ounce, in 12 months. We've heard those predictions. It's just not going to happen in this reality. Now, maybe if everything breaks, maybe if there's a shortage of physical gold. We saw that in India where gold got to, in the black market, when they did ban the cash recently, we saw gold get to 3,000. Maybe we could have a situation like that. But, they're just not really going to, the people in power want more power. I see them trying to gain more power over markets and not less. So things are going to get worse before they get better. The thing is, though, the more the manipulation occurs in gold and silver markets, the more physical metal will evaporate from the market. It will either go to other markets or the miners will stop producing at some point. The capital will just not be available. They won't bring on any new mines to replace depleted reserves. So they can only take this thing so far. So the people are saying, oh, silver, is going below $10. Maybe for a short amount of time, it theoretically could. It would basically bankrupt almost every single primary silver miner. When silver was at $13 in 2015 or close to 13, the miners were on the brink, a lot of them. A lot of them were close to bankruptcy. And the gold miners, when gold got to $10.75, they weren't in good shape either. So they were in major trouble. They were very close to shutting down mines. And, the metal is still needed. For the manipulation, they still have to have some metal. So this is they can only manipulate things down lower and lower for a short amount of time, and then they have to let the steam back out of the market and let the price rise a little bit again. Well, welcome to dystopia, guys. So this is just really a bunch of bullshit. The world is becoming tougher and tougher. I wish things would be less stressful, but I'm just here to report it for right now, and hopefully, people are I'm here to help you guys as best as I can. If you're an Indian citizen or you have friends in India, tell them about Bitcoin, tell them about gold money. Tell them how they can protect themselves and open up accounts. People are going to have to be entrepreneurial and creative to get around these stupid government rules and regulations. The war on cash and cashless society and the cashless economy. Not everyone wants to pay with their smartphone or cell phone. Obviously in a free market, that's nice to have the convenience and option in order to do so. That would be great to be able to pay with whatever you want. But, to force people with legal tender laws and, banning certain types of bills like what Paul Krugman and Ken Rogoff in his new book and all these other scumbags like Larry Summers are talking about, these ridiculously wrong academic PhD Keynesian economists that are ass-kissers for the government, that are big government apologists, to force people to not be able to pay cash if they don't want to. It's just unbelievable. So, the people in India, I feel really sad for them. Thousands of Indians are dying already due to these stupid laws. With their smartphones, if they have smartphones, because I know a lot of people in India, it's a cash economy. The Indian consumer is going to have to maybe get a smartphone. They're going to have Bitcoin. They're going to figure out ways to go around these laws. So maybe they do it with gold money, Bitcoin, some combination of these things. People shouldn't be forced to do this, but this is what governments are forcing people to do in order to survive. So people are going to have to adapt to the bullshit that governments are continue to do. And governments are becoming increasingly more desperate and power hungry. The mainstream media, which in my opinion has basically lost all of its credibility after intentionally not warning people about the 2008 financial crisis, intentionally not telling people the truth about the Iraq war, and intentionally trying to pick out their chosen candidate, Hillary Clinton, and ignoring all of her felonies that she has committed with the Clinton Foundation, and just really trying to destroy Donald Trump's character. Unbelievable. The one-sided coverage that we have. The mainstream media shouldn't have any more credibility. But, people, there are still a large percentage of people in the United States that are still brainwashed. Almost half the country is still brainwashed. There was a good chunk, not counting, the dead people and the illegal immigrants that voted for Hillary Clinton. But, actual people who voted for Hillary Clinton for stupid reasons, they either don't want to wake up, they're either ignoring the truth and don't care, or there's financial incentive for them to do so, or some other type of incentive for them to do so, to vote for Hillary Clinton, for that monster. Okay, well, thanks for watching this video, guys. Have a great weekend. We have some other interview guests booked. I'm trying to get Jack Abramoff on, the former top lobbyist, in the next couple weeks to talk about how difficult it will be for Donald Trump to drain the swamp and corruption in the Washington, D.C. area with lobbying and bureaucrats and so much of the system. So you guys can learn how difficult it will be for Donald Trump when he actually takes office in mid to late January 20th, in order to try to fix things. And Jack Abramoff, for those of you not familiar, was at one point one of the top lobbyists in the United States. He did go to prison, but there's lots of lobbyists who do the same shit he does who don't go to prison. He just got caught doing it, or maybe someone else turned him in or whatever because he was Republican. But yeah, the stuff that gets done in Washington, D.C. for the lobbyists is pretty normal. And unfortunately, a lot of these large corporations, they can get 100-to-1 returns or more on their money by hiring lobbyists and creating new legislations and taxes and rules to prevent competition in their industry. This is why a lot of these IP laws and patent laws in the United States suck. They actually prevent a lot of competition and innovation and entrepreneurship. We need to fix these things. I don't think one term of Donald Trump will be able to fix things. The mainstream media is hoping that they can help impeach Donald Trump, or at a worst case scenario for them to limit Donald Trump to only one term. Okay, bye guys. Hi everyone, it's Jason Burak of Wall Street for Main Street. Thanks again for tuning into our podcast and for helping us get over 2 million views on our YouTube channel and over 10,000 iTunes downloads per month. We have a special offer for our Wall Street for Main Street listeners that has proven to be a good investment based on plenty of 5-star reviews from satisfied customers and independent fashion bloggers. Mo and I recently tried some shoes from a new company which is run by a family of third-generation shoemakers called Grant Stone Shoes. These are classic Goodyear Welt shoes using full-grain leathers from world-renowned tanneries. In a world filled with disposable products, it can be difficult to find items which can be used for years and later passed down to the next generation. Grant Stone is a smaller brand going direct to the consumer, which offers unprecedented value. Quality and fit is the cornerstone of their program, and the customer response and reviews confirm this. These are high-quality shoes at a good price for the busy professional who wants to improve their appearance at the office, in the boardroom, or out on the town with your girlfriend or wife. Or, if you're single like me, you know you will look good with these shoes on and maybe impress the ladies with your style and taste. But if the ladies love Obama or Hillary Clinton or Bernie Sanders and hate free markets or capitalism or entrepreneurs, at least I will look and feel good in my comfy Grant Stone shoes. Mo and I have worked out a special offer for our listeners. So when you go to grantstoneshoes.com, enter the code GOLD, that's GOLD, for 10% off any purchase. That's grantstoneshoes.com and enter promo code GOLD.